Hello and welcome to Inderes TV. SciBase published its Q2 report yesterday and I'm here with Analyst Antti Luiro to discuss the report and what's going on in the company. Hi Antti.
Hey Pia.
So could you start by summarizing the Q2?
Sure. So Q2 big picture is that SciBase continued their growth. Not as fast as we expected, but still the direction is right. And the burn rate in the quarter was roughly what we expected. So numbers-wise, a little bit weaker on the top line, but you shouldn't look at an individual quarter on a company like this. It's a trend that we care about. What was good when we just look back a little bit, a few months, is that the commercial environment in the US looks to be a bit better right now. So a key competitor, at least a competitor, DermTech, filed for bankruptcy in the US, and SciBase has been able to retain some talent from there. And this also helps them a little bit in the sales process when there's less providers going for the same customers. So it's a little bit of a better environment going forward for them to drive growth in the US. But at the same time, we were looking for signals in the report that could we see the US growth, some early signals that a year from now SciBase would be accelerating its growth. And that's something we were missing from the report. So the uncertainty regarding how well the growth acceleration would work out in the US and when that might happen and when might that bring the company to cash flow positivity, right. That's still a bit in the dark. But overall, no kind of big surprises in the report.
No, well, that's good, at least.
Yeah.
But staying in the US, there was a partnership established with a large healthcare group in LA.
Yeah.
And a first order also came in from there. How significant is this partnership?
So I would say, of course, every single customer that SciBase is able to get, especially in the US, which is going to be a big market going forward, is naturally positive for the company. Individual customers like this, of course, they're not going to bring significant revenue in the beginning. It's only in the long term if SciBase is successful in getting the insurance reimbursement coverage to a higher level, and then scaling the use of their Nevisense platform in these customers going forward. So I would say this is part of the groundwork that the company is doing to make sure that when they have the position with the insurance coverage in the US to press the gas pedal and accelerate with the growth, then it's really important to have these customers. But short term, no big implications for the company. It's more sort of groundwork for the future.
Yeah, so a small step forward, but nothing major at this point.
Yeah, exactly. Yeah. And of course, it's all small signals that the position and the attractiveness of their offering is still good, that they're able to get these customers. So of course, that's good. But then again, we expect these things to happen all the time for the company, and we're expecting quite a bit of growth for SciBase going forward.
So there was also a first order coming in from Austria, a completely new market. What's the potential there? Once again, of course, we don't know yet. But
So I would say Austria is a nice addition to SciBase's sort of existing good position in Germany. So if we think of the kind of German-speaking countries in general, in Germany that's sort of their main markets for now, and it's generating good revenues for them, but still small in the kind of large scale. And Austria, that's a good addition to that. And if the company is able to do that expansion to Austria with a good return for investment, I mean, of course, they're still burning cash, so they need to be very strict on where they spend the money. It's, of course, good for them to get forward. But in the big picture, what's going to make or break SciBase's investment case is bringing the business to a scale that is large enough to bring the profitability to a break-even and get to a positive cash flow. And in this context, Austria is sort of a very small part. But obviously, every single good growth investment they're able to make and generate revenue is positive. But in the big picture, it's still a small part.
Yeah, so these deals individually are always, at this point, still small, but anything going forward is, of course, positive. And seeing these deals. But as you mentioned, it's something that we expect as well. Because if there's no deals, nothing's going forward. Yeah,
absolutely. Yeah.
You already mentioned a bit about the cash burning rate, but so there was this very complicated rights issue earlier this year, and we actually made a video about it, so you can go watch that to get a better understanding. But so the cash position right now, it's better than it was.
Absolutely. Yeah. So what the raise done in the spring did for SciBase is it took off the immediate pressure from their sort of cash position. but also the amount is not giving them too many quarters of room to work with. So SciBase is burning some 15 million SEK per quarter, and the raise brought in, if I remember correctly, 38 million SEK. Check our report to get the exact amount if I remember that wrong. But basically that's going to last some 2.5 additional quarters. And looking at the cash position they had end of June, it's looking like they will have cash until Q1 2025. So the next raise, I would guess, is somewhere in early 25 or then late this year. And obviously, there's a big question around what are the terms going to be in that raise. And for that raise to be successful, I think all the signs we can get and all the signals we can get for SciBase's expansion in US to be successful would be very, very beneficial. Because that's also the main risk for the investors. How long is the cash burn going to take? Are there going to be some delays in the growth in US that is expected to bring the company to break even? And if SciBase is able to take these risks to move them aside a little bit, show some early signals that the growth is indeed happening, and you see sort of, let's say, the reimbursement rates in different states picking up, and then all right, so the time for them to start really accelerate with revenues is getting nearer, then they will get to a better position. But so far we're still looking for those signs, and the companies, the potential is the same, of course, but just the visibility into the success and what is the risk of things getting delayed. That's still sort of what's a little bit slowing us down with our view.
Yeah. So, of course, the insurance coverage and reimbursement would be a big sales driver in the US, and I assume there was no actual news about this at this point.
Indeed. So nothing major on that. So clearly SciBase is making progress. They're working on it all the time. But how long is it going to take, and when do they reach a sort of tipping point in a certain state where there's enough reimbursement for the clinics to start using Nevisens with larger volumes? That is sort of the question.
Yeah. And then finally, what about the current valuation and recommendation? Where are we standing? Yeah.
So big picture is that the valuation it's not high compared to the potential of the company, and I think that's very clear. So again, if we remember the investment case, there's a clear need for better diagnostics in skin cancer. There are not many providers out there, and SciBase seems to be the only sort of reasonable provider in that playing field. And there's quite a big market behind it as well. And the way SciBase does business is also that they're selling these high gross margin repeat use parts to their customers. So if they get to a high scale, then obviously this can be a very, very profitable business. But then what's slowing us down is then how long will it take to get to the break even? Yeah. And that's usually the case with these companies, is that even if your investment thesis, the idea that the company becomes what you think they can become, even if that happens, if it takes longer and there's many more rounds of equity raises which dilute your ownership, you might not get good investment returns. And I think that's still the risk we're balancing with here. So the share price is somewhere in the lower half of our fair value range at the time the report was published. And to get to the higher half, we think there would need to be clear signs and clear early signals for the US growth accelerating. For example, the reimbursement rate picking up and seeing certain states start sort of picking up with the revenue growth. So for now, since we don't have that visibility and there's still quite a bit of risks related to that growth being delayed, and then that having implications for the equity raises, we still think the company is going to raise at least two raises around 60 million SEK each. But there could be more if the growth is also delayed. So right now we're still more cautious with where we think the price of the company should be, where the value of the company is with the current knowledge. But of course, this can change very rapidly if the company is able to bring more visibility into the growth. So lots of potential, but also lots of risk to carry. And if things work out well, you can get an excellent return from the current levels where this company is priced. I think that's very clear. But also there's always the chance that the dilution just keeps sort of racking up, and new finance rounds keep taking away the value you have in your ownership of the company. So now still on the cautious side, but we have to be very careful in following what the company is able to show in terms of the growth accelerating. Yeah. So long answer, but hope you get sort of the both sides of it, the risks and also the potential, which I think is still very, very clear.
Yeah, and our recommendation is?
Our recommendation right now is reduced, so that basically means that the risk reward for the stock is not attractive enough. Yeah. At a lower price, we could have gotten there, and also if the company then is able to help take down the risks related to the investment gains, then obviously the stock should be priced higher as well.
Okay, thank you, Antti. So SciBase, high risk, high potential, and we need more visibility. Go read the report at inderes.se.